This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say, at PennyMac, greatness lives here.
Welcome to The Interest. I'm Christine Stewart, and we're getting started today with Maximum Acceleration. We're looking to inspire you and motivate you to be better at what you do. These conferences are also about forming partnerships, and that's just what happened this week when Rocket teamed up with Santander Bank. Our own staff writer, Sarah Wolick, is here to tell you more about that.
About a week ago, Rocket Mortgage and Santander Bank announced a partnership, which now means that Santander's nearly 2 million customers can take advantage of Rocket's mortgage services.
This is an opportunity for us to transform who we are, to be a business-to-business service provider, and really with one purpose, to drive market share within the mortgage arena, as we are now the largest lender in the country, and as we pursue growth on top of our existing retail channels.
Sam Shea, who is in charge of partnerships at Rocket Mortgage, said that Santander decided to exit the mortgage industry in February. Following that decision, they decided to approach Rocket with an opportunity to be their exclusive mortgage provider.
I think it's important that we zoom out, right? Back in February, Santander Bank decided strategically they were no longer going to offer mortgage here in the United States. And what that meant is that as a loyal bank customer, you had to look elsewhere.
Shea also said that this partnership emphasizes a streamlined customer experience where customers will now be able to have one-stop banking.
So it's risk mitigation, risk exposure relief on the asset side, and it's premium client service when it comes to mortgage on the client-centric side.
Not only is this collaboration easier on clients, Shea said that they will now have access to exclusive offers like discounts on loan costs and closing costs. Shea also said that Santander private clients will have enhanced markdowns.
They'll also get a white glove service, meaning we have a dedicated banking team, a dedicated operations team, and a dedicated technology team supporting their experience really from end to end. That is from application, really all the way through loan payoff.
For the Mortgage News Network, I'm Sarah Wolick.
Sales of existing homes fell nearly 6% in July, the sixth straight monthly decline. The National Association of Realtors said that total housing inventory at the end of July was up 4.8% from June and unchanged from the previous year. The median existing home price for all housing types in June was over $400,000. That's up 10.8% from July 2021. It was the 125th consecutive month of year-over-year increases, the longest streak on record. In other news, the risk of mortgage fraud decreased by 13.5% between the first and second quarter this year. It's now down to 7.5% over the year. Officials noted that while fraud risk is down from last quarter, recent data shows this trend is reversing and fraud risk is expected to increase in the coming months. That's at the same time that mortgage rates are dropping again. Freddie Mac says the rate this week for a 30-year fixed-rate loan is back down to 5.13%. That's a drop of 9 basis points from last week. Inflation appears to be beyond its peak, which has stopped the rapid increase in mortgage rates that the housing market was experiencing earlier this year. But the market continues to adjust to price and rate increases, and as a result, purchase demand will likely continue to drag. That means brokers will have to find creative ways to find new customers. At Originator Connect here in Vegas, we will be talking to brokers about how to form relationships with private investors and expand their portfolio. But a recent report from Redfin finds that things may have reached a plateau. Real estate investors purchased 87,500 homes in the second quarter. That's up 11% over last quarter and 5.9% over the year. Investors are still buying more homes than they were before the pandemic. But the report found that investor market share has started to level off, even though it remains above pre-pandemic levels. Later today, we will be talking to experts at our private lender forum about how to tap into this marketplace. Tune in tomorrow to find out what they had to say. We'll be right back after a word from our sponsor.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, go to mortgagenewsnetwork.com.